Good day to you or welcome to Future Online Academy. I'm Mr. Hammer from Future Online Academy. I'm going to assist you in terms of an example of control accounts. Most of you might be facing challenges in accounting. Don't worry, don't stress. My number is on the screen. I can assist you. One-on-one lessons only. Please be advised. One-on-one only at an affordable price. We want to take a look at an example of control accounts. I will display the question on the screen and I will actually read out the question. But first and foremost, you are required to prepare the sales ledger control account. If you are required sales ledger control account, you write sales ledger control account in full, guys. Then you put, in terms of Cambridge, you are given the columns, don't stress. But in terms of financial accounting, ZIMSEC, you have to draw your own columns. I mean, in terms of Cambridge, they give you actually here, they write date here. Let me just write the way they do it. They give you in terms of date, then they give you in terms of details. These are the currencies. They give you in terms of date also. Then they give you in terms of details. In some cases, they can actually write the balance BD for you. Cambridge is easy, guys. But ZIMSEC, you have to know for yourself. So before we move on to this question, I'm going to display the question on the screen. Then we are going to read it out and look at it. 2010. Please note that your dates, they are 2010. The dates are, first you write the year 2010, then you write your month. Since a sales ledger control account has got a debit balance, you're going to put it here. But I've seen that they've given debit balance sales ledger, credit balance sales ledger. You're given the credit balances also. What are you going to do? You're given that the debit balances in the sales ledger 22,000. Debit balance, it means it's here. You record balance BD. How much? 22,000, right? Then you are given that the credit balance is in the sales ledger 1,800. You record on the credit side according to the format in the first video. Balance CD, sorry, not balance CD. It's balance BD because it is given. It will be 1,800. Then you are given that ignore the credit balance sales ledger, purchases ledger, and the credit purchases ledger. Why? Because we are dealing with the sales ledger control account. We are not dealing with any of the purchases ledger account. Then we move on to the credit purchases. We ignore because we are dealing with the sales ledger control account. We move on to the credit sales. Credit sales is recorded in the sales ledger control account. It is May 31. We have credit sales. In terms of credit sales, we record how much was credit sales. Credit sales was 100,000, right? Then we have good return to suppliers. We ignore, it is recorded in the purchases ledger account. We move on to the goods returned by customers. These are sales returns. These are, sorry, this we write returns. How much? Returns are going to be 5,000, if I'm not mistaken. It is 5,000. Then moving on, we have discount allowed. We record the discount allowed also. Discount allowed of how much? Discount allowed was $950. Then you also have discount received. It is recorded in the purchases ledger account, purchase ledger control account, sorry. Then we have cash received from customers. We record cash. The cash figure, how much? 89,500. Then we also have the petty cash payment to suppliers. We ignore. We have the bad debt return off. Remember, according to the format, we said we record bad debts on the credit side, which is going to be 3. Bad debts are going to be 1,250. Then purchases ledger balances set off against sales ledger balances. What it means is that a contra entry means that, suppose, let's say we have a balance in the sales ledger of $50. Then the purchases ledger control account, we have a balance of $50. We just say, okay, suppose, let's say for example, you are a customer. Suppose, let's say it's Vusa. Vusa, you owe me $50. I, Mr. Hammer, I owe you $50. Instead of saying, Vusa, give me $50, then I give me $50, we just say, no, brother man, let's do a contra entry whereby I don't give you the $50, but we just set off, since I have my $50 and I have your $50, we will just set off. That's what happens also in terms of contra accounts. That's what it means. So we are going to record the set off or the contra with how much contra, which is 2,000. You discover that this contra, when we are preparing a purchases ledger contra account, we also record the same contra. Then after that, we now need to do what? We now need to balance off. But be advised that there were no debit balances in the purchases ledger and credit balances in the sales ledger. What they mean is that suppose if there was a balance CD here, suppose let's say 3,000. It means that if they said there was no credit balance in the ledger, this balance CD will become a credit balance. That's what they mean. There was no credit balances in the sales ledger on 31 May. Means say we are not given the balance CD here. We just ignore. What we are going to do here is we are going to calculate the balance CD. This aspect. I'm not going to waste much of your time. Before you balance off, you need to know that our balance CD comes here 2010. This was May. We are going to have June 1 balance BD. Okay. Make sure you have your calculator to calculate. If you add this side 100,000 plus 22,000, I forgot something. I forgot to record the discount risk. So debtors checks dishonored. I forgot to record the dishonored. Sorry, this dishonored. Do you know the spelling? Dishonored checks of how much? Of 3,000. I actually missed it out. Make sure in an examination you don't do the same mistake as I have done here. But let's use our calculator. Let's punch our figures on the calculator. You need to add this side. If you add this side, you get 125,000. Then it means that this side is bigger than this one. We write 125,000. Then 125,000 minus the total of these balances, you get a 24,000. Then balance BD is going to be 24,000. That's how you prepare a sales ledger control account. But before I move, I go any further, I want to explain a certain scenario which you might encounter in an examination. Suppose okay, let me give you the certain scenarios. Suppose that they ask you the reasons. Let me just run. I hope you noted down everything here. Let's look at the most common aspect, which is poorly done by many students, especially advanced level. You perform poorly on this section. Let us look at the aspect. You might be asked to write the reasons. The examiner may ask you the reasons for a credit balance in a sales ledger control account. This is the most critical part. You perform poorly, guys, on this aspect. It's actually pity that you perform poorly while Mr. Hammer is there for you. I actually discovered it when I was writing down the sales ledger account, and I discovered that this aspect is usually asked in accounting, especially A level, O level. Yes. How do you answer this one? You need to know that first step, before we actually give the reasons, know this. A sales ledger control account is got a debit balance. This is the starting point. It is a debit balance at the end of a given accounting period. And this actually represents the amount owed by what? Debtors. It represents the amount owed by debtors, and this actually happens that the debtors control account will have both. Suppose if you discover the last example which we did, it has both the credit side and the debit side, and this credit balance is usually smaller. Referring back to our example, you discover that our credit balance has got $1,800, and the credit debtors control account may arise. So this credit balance, we want to take a look, why does the 1,800 credit balance arise? The reasons why there is a credit balance in a sales ledger account. The first reason is that, reason number one, it's about customer overpayment. Suppose we are saying maybe a customer could have overpaid his account. Mr. Hammer has overpaid his account. And this overpayment, it cannot be set off against other customers' outstanding balance. So it means that this overpayment will actually lead to the credit balance in the sales ledger account. Then on aspect number two, a customer may not have been refunded. So maybe customer not refunded. Suppose a customer is not refunded for goods. We have not refunded for goods returned to the business after he paid in full. Suppose a customer is not been refunded for the goods. Maybe the goods were faulty, but the customer has returned the goods to the business, which he paid in full, but we haven't refunded the customer. Suppose the customer is Bonghan. Then let's move on to aspect number three. Customer paid the goods in advance. Maybe customer paid in advance. There is payment in advance. Hence, this will lead to the credit balance. Suppose our customer Bongani is paid the goods in advance. Then, also another aspect, we have what we call the error of omission. Error of omission. Error of commission. We'll definitely dive deeper into this error where we are dealing with the suspense and errors. Henceforth, error of commission is saying that suppose a payment has been posted to the wrong data. We have posted to the wrong data. Then, moving on to item 5, maybe the discount allowed. Discount allowed was not taken into account. Maybe the discount allowed was not taken into account when the account was settled. We did not take this into account. These 5 reasons, you need to know them. I have actually assisted you. Don't run away from a question. And in terms of accounting, you don't choose, my friend. You actually answer everything. So in this case, I have done this part, the reasons for a credit balance sales ledger, customer overpayment, customer not refunded for the goods, he has returned to the business, customer paid in advance for the goods. Then error of commission, whereby we have posted a payment to the wrong data. The discount allowed was not taken into account. I hope it was a fruitful lesson. Let's meet in another video where we'll take a look at the purchases ledger account.